the last couple of months have been absolutely brutal
House of Pain
for the formerly red-hot cloud software stocks, especially if they have the misfortune of reporting imperfect results over the same period. Which brings me to Cramer faves Zscaler, the cloud-based enterprise software play that was one of the best performers from the IPO class of 2018. After hitting a fresh all-time high of 89 in late July, this thing ran straight into a concrete retaining wall. First, the whole market got hammered, and we got a rotation out of the high-flying cloud plays. Then, just as some of the cloud stocks started to bounce last week, Zscaler reported a solid quarter, but underwhelmed in guidance, and the stock got steamrolled, plummeting from 61 to 49 in a single session. This whole move has been devastating, but luckily the company had a chance to change the narrative. Earlier this week, they had a well-attended analyst meeting where management got back to basics and explained why their strategy is working. Stock's now begun to bounce, up to 51 today. So is Zscaler finally put in a bottom, or do we need to be more cautious here? Let's take a closer look with Jay Chaudhry. He's the co-founder, chairman, and CEO of Zscaler to get a better sense of how his company's doing and where it's headed. Mr. Chaudhry, welcome back to Mad Money.
Jim, thank you. I appreciate the opportunity.
Absolutely. Okay, so Jay, we got to try to understand this. Even myself, I've been a stalwart for Zscaler. It just seems like that the competition's gotten too great. I mean, I had Nikesh on from Palo Alto recently, and he just said, listen, I'm kind of going after everybody. Are you seeing a real disruption by Palo Alto and a real change in the narrative in your business?
Jim, the answer is no. You know, a few weeks ago, there was an analyst day, and I got a number of texts. They said, these guys are talking more about Zscaler than themselves. You know, when paradigm shift takes place, incumbents and legacy vendors are often displaced. They feel the pain, and they try to attack everyone. That's really what we're seeing, but it's not changing our business. To do cloud security right, you need to have purpose-built architecture. You can't take the legacy boxes and stick them in a cloud and say it's cloud security. That will be like taking DVD players and putting them in a data center and calling it a Netflix service.
I like that. That's good. That's something everybody can understand. But remember, Jay, part of the problem was a comment that you made on the call where my jaw dropped when I heard it, which you were saying large deals taking longer to close. And what that said to me was that somebody else is sampling a competitor, and therefore you're not able to necessarily have the run of the table as you have for so long.
Now, Jim, we had a strong quarter. We actually beat our analyst earnings target. Our revenue target, we did 59% year-over-year growth. For bookings, we did 51%. The market is coming to us. We're seeing a lot of growth. We crossed 400 of the global 2,000 companies as our customers. So very bullish about the opportunity.
Now, let's talk about two misperceptions about your company. The first one is a lot of people feel that Microsoft is your enemy, but it's really the opposite, as you explained at the analyst meeting, correct?
Yes, very much so. Very good partner. We help them, they help us.
And second, a lot of people felt that CrowdStrike was going to come after you. CrowdStrike, and you announced a pretty seminal partnership, correct?
That is correct, because CrowdStrike is a leader in endpoint security. We are a leader in cloud security. We are both complementary offerings, and together we offer better solution than a lot of legacy vendors.
Right now, you did have a little blue coat mention in your conference, but isn't a lot of your business still to take from Symantec? And I felt that one of the reasons that Rick Hill was willing to part with Symantec and give it to Broadcom is that Zscaler has been so tough on them.
So vendors like Symantec and WebSense were the first phase of replacement, because where we sit is replacing those traditional legacy vendors. But our growth in the past few years is coming more and more by doing local internet breakouts, means having an internet connection at each branch office, and we provide security. So a lot of our business is coming from doing branch firewalls, data loss prevention, advanced threat protection, and the like. So we have a pretty broad platform. So we are not really selling just the type of solution Blue Coat and others sold. It's a full platform that customers are buying.
All right, so Jay, last thing you need to worry about. There's a lot of talk on the network about the macro issues, that there are companies that are just not doing well. There was even a question by Brad Zelnick, a very good analyst from Credit Suisse, asking whether macro issues had anything to do with some of the things about trying to close some larger deals. Are you seeing any weakness on the macro side for cybersecurity?
Not really, actually. Even if macro issues start to happen, Zscaler provides significant cost savings. And the savings come from not having to buy and deploy traditional security boxes. They come from reduced operating cost, and they also come from tons of savings by not needing to have a private networks. So we think we will be in a very good position, even if the market slows down. And we're seeing some of the largest companies, GE and Siemens, have stated the kind of savings they have done with Zscaler. The numbers go as much as 60% of what they were spending before in terms of savings. So we like the market. We think we are well positioned for the next year.
All right, that's terrific, Jay. Thank you for coming on. Congratulations on the CrowdStrike deal and for a good analyst meeting. That's Jay Chaudhry, founder, chairman, and CEO of Zscaler. Very interesting company. Got to be sure that the competition is dying down. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.